I'm about to break some hearts, step on some toes, and offend some feelings. I apologize up front. My name is Amos, and welcome to the Dividend Compounders with Cheese YouTube channel. And that's because everywhere that you look on YouTube, stock tweets, or even on Reddit, everyone loves Adobe and they think it's undervalued and they think it's such a high quality compounder that's on a discount. And to that, I have an unpopular opinion. And I already know I'm gonna get a crap ton of toxic comments like what you see on your screen right now. And it makes sense. If you're invested into a business or a stock, you wanna hear content that makes you feel bullish. But I would argue if you're only searching for confirmation bias, then a second opinion coming from me or other people or a bear case, it doesn't matter to you anyway. You would rather operate in an echo chamber and sink with the ship. All I'm trying to say is that by the end of the video, if you don't at least question your bullish thesis on Adobe, then you probably were not listening. And the thing is, man to man, I was wrong. Because not too long ago, I used to be bullish on Adobe, just like yourself. In fact, the Patreon family knows that I was on the fence with Adobe. I was about to pull the trigger and jump in. But after fully understanding the landscape and the ramifications of the software and tech stocks sell-off, I get it now. I get why Adobe's in a hairy situation. Adobe reminds me of PayPal. It has fantastic numbers, fundamentals, and financials. And the reason why I make that comparison, if you look on YouTube from some of your favorite stock YouTubers, dude, they were all bullish on PayPal. At the same time, I was skeptical. I uploaded video after video saying, I don't know about this one, and I got a lot of hater comments on those videos as well. Even when you called me out and said, you're not baking in their $15 billion of share buybacks. And how's that working out for PayPal, right? The stock just keeps sinking, dipping, and decreasing day after day. Now, for different reasons, I think the same is gonna happen with Adobe. Now, this video, it's not a Adobe is a bad company argument. It's that the growth expectations, it might be resetting type of argument. So if that makes sense with you, let's get into it. As we take a look at what's happening with Adobe and we zoom out 5 years, this is a company where back during 2021, they were roughly almost $700 a share. Not exactly, but almost, right? And then just like 2 years ago, roughly $634. But if we just zoom back 1 year, 42% into the red. It's pretty wild considering almost everything about this company is outrageously good on paper, right? Their forward trading multiple is 11. So you would think their top line, their free cash flow, their earnings would be increasing by like 1% or even being stagnant. It's not the case. So as we take a look at their top line year after year consistently, they keep growing at a double-digit rate. You zoom down and take a look at their bottom line, exact same situation. The overall trend is up and to the right. And if we take a look at the PEG ratio, 11.22 divided by 35.11, it's 0.319. Anything less than 1 screams undervalued. When we're talking about 0.3, dude, that's outrageous. And again, if we take a look at the SAS rule of 40, it's a 10.53. We're gonna add it by their free cash flow margin. Hop on over to the cash flow statement. We're adding it by 41.45. We're getting 51.9. The standard for a high quality software stock is at least 40. Adobe's executing 51.9. And it gets even better because if we take a look at the free cash flow, I mean, this is phenomenal. $9.8 billion of free cash flow going into their pockets. And if we take a look at how severe their debt situation is, the debt to EBITDA ratio is a 0.71. The standard is at least a 3. To have a 0.71, this is a cash heavy, beautiful operation. Again, on paper. So when I categorize Adobe into tier 4 as a horizontal software platform, it's not a diss, it's not me making fun of them, it's facts. Their numbers and financials, it looks good. But the arguments that I'm trying to make in this video, it's for the future. It's not baked in yet. What they're pulling off in the current tense, it looks good. But the markets are forward looking. What's going to happen 3 years from now, 10 years from now? And that's what I'm trying to articulate. You can't sit here with an honest face and tell me that Adobe is in the tier 1, the infrastructure of the AI movement, or tier 2 as the enterprise backbone of all the operations that connects all the different departments and teams to one another. And Adobe is certainly not a one-stop shop as a vertical software. They are horizontal by definition because they provide a whole different array of options to create, to design, to edit a photograph or a video. And they also have document tools like the Adobe Acrobat. And the reason why it's horizontal is that they cater to every industry. They don't zero in on one specific niche. And by definition, a horizontal software company, their reach is a mile wide. They cast a wide net to anybody and everybody. But the fact of the matter is, its whole company organizational depth is shallow, and it pales in comparison to a true central nervous system, tier 2 ServiceNow or Salesforce. If a company stops using ServiceNow, for instance, the whole company breaks. It shatters. You cannot operate business as usual because HR cannot onboard the new hires, IT cannot track tickets and malfunctions and everything else, and the legal team will not be able to manage their ongoing investigations and contracts. That's how important a true central nervous system is, a tier 2 caliber of a tech operation. However, on the other end, if a company stops using Adobe, the content that they're able to produce and create, it might stop, but the operations of the business as a whole, it goes on. Hiring, billing, compliance, strategy. I'm talking about like Nike, Procter & Gamble, Amazon. Now, obviously, if it's a creative agency or a video editing team for a Netflix production, obviously, it's a game changer. Adobe is a horizontal software company because design is a universal function that'll look exactly the same for a finance team, for a shoe company, a retail apparel company, or even your local church. So by definition, it is horizontal, and that distinction matters. Adobe's in the business of creative tools for the most part. I think 60 to 70% of their revenue is generated from their creative suite. And if we back up a bit and think about it, for the longest time, their economic moat was complexity. To get someone to be able to edit a photo or a video, they had to spend 10,000 hours becoming familiarized with all the settings and tools in Adobe Premiere Pro, Photoshop, After Effects plugins, and the list goes on and on. Nobody could do what they could do, all in one platform. Having said that, generative AI from Grok, Gemini, OpenAI, it's changing the name of the game. I mean, look how far generative AI has come. If we look at this prompt, right? You just tell AI what to do and they can create it in real time. A stylish woman walking down Tokyo, boom, done. Just like that. If we hop on over to the next slide, here's another prompt. Several giant woolly mammoths approach treading through a snowy meadow. That looks pretty darn good. Wouldn't you say? I mean, this is OpenAI. We could do the same with Google, with Grok, with Anthropic, and they're all pretty much able to create this type of high quality production and content. And here's another prompt, right? A movie trailer featuring the adventures of a 30-year-old spaceman. I mean, that looks pretty darn good and realistic, right? So my next argument is this. I think the customer base for Adobe, it's only going to get smaller and smaller. Now hear me out. I don't think Hollywood or Netflix professionals are going to jump ship because Adobe's the industry standard. I agree with that. But if you think about it, a lot of non-creative customers that are paying to use Adobe right now, they're just going to use OpenAI's Sora, what we're seeing on your screen right now, or Figma, or Google's VO, and other tools that are good enough. AI can do what most professional editors can do. And don't even get me started on voice actors and music production professionals. I have friends in both of those fields, and it's being absolutely disrupted by AI. I mean, one thing that drives me up the wall is up until like two or 3 years ago, the Wall Street Journal, I like to listen to the articles instead of reading it. That way I can do stuff with my hands. It used to be a real human. And now it's defaulted to just AI reading a script. And obviously you can tell because instead of saying 5 feet, they'll say 5 FT. You know what I'm saying? Only an AI would make that mistake. But fast forward to today, those AI voice narrations, it's getting so much better to the point that you can't distinguish who's a real human and who's fake. For the longest time, when I didn't show my face on this channel, people used to make allegations that I was AI as well. Now, of course, a Photoshop or video editing tool, it's still gonna be needed to fine-tune the edits after you film for like 5 hours, right? You're not just gonna default that to AI and trust them YOLO. Take the wheel. No, you're obviously going to adjust and modify the final product. What I'm trying to say is, does that require the same amount of people on the marketing or creative team? Like in the past, if it took 20 people in order to edit and produce content, will it still take that many? I'm not trying to be a negative Nancy, but if AI allows one designer to do the work of like 5 production folks, subscription seat growth slows down. And for Adobe, they charge per seat. Now here's a real world example. A small business used to hire an agency, and let's assume that creative agency uses Adobe to edit all of their production, okay? And the reason why the small business, let's go ahead and assume it's a dry cleaning business, they hire a digital advertising agency because they don't know how to edit videos, right? But now in 2026, in 2028, that exact same business owner, they could just use Midjourney or Canva's Magic Studio or CapCut, and they can get the product that they want without the agency involved. Does that make sense? I'm not trying to be that guy, but for most small to medium-sized businesses, they don't need a professional grade photograph or video. They just need something that's good enough to be posted on LinkedIn or Instagram. So, having said that, Adobe's losing the bottom of the pyramid, which is where the mass market volume lives. So a lot of these small to medium-sized businesses or folks that are not affiliated with the creative space, they might just go somewhere else. And if that continues to happen as a trend, these agencies that edit photos and videos for a living, they're not going to have the same amount of relevance going forward. Now, I think that's sad because some people's livelihoods, they make a full-time living editing photographs and everything else. On the other hand, AI, they're coming for everyone's lunch. Nobody is safe at this point. They're coming for lawyers, they're coming for data scientists, they're coming for actuaries. Everyone is under attack right now, apparently. In fact, I think some of the existing customers of Adobe, they might even drop their social media teams altogether and just default to AI in the near future. I mean, as a YouTuber, I can tell you, YouTube is rolling out, constantly implementing new AI features where, for instance, in the past, someone might pay a dude from the Philippines or Nigeria like $15 to make their thumbnail, but now it's fully integrated in YouTube and they just do it for free. And that's just one example from the lens of a YouTuber. But think about all of the different entrepreneurs and small business owners out there, but also the enterprise organizations and S&P 500 operations. Now, I do want to reiterate this point. I don't think that Adobe is going to see a drastic revenue drop in the next quarter or two, or maybe even this year, right? I still think they're going to be able to grow. And so the narrative around Adobe is going to be even more confusing. On the other hand, in the next 5 to 10 years, unfortunately, I think Adobe's growth story is going to stall or even shrink as more competitors keep sprouting up. I'm telling you right now, vibe coding has lowered the barrier to the complexity of designing, editing, or adjusting photos and videos. Adobe is no longer the only one that can do what they do. So at this point in the video, we understand that there's increasing competition from Canva, Figma, Midjourney, Runway, and DaVinci Resolve on the creative side of the house. But if you think about Adobe's other business model, the PDF domain, there's alternatives to that as well. From Nitro PDF, which is what my wife uses, there's PDF Element, Foxit PDF, PDF Gear, and the list goes on and on and on. Now, me personally, in the past 3 months, I just transitioned from using Adobe Premiere Pro to now using DaVinci Resolve to save a little bit of money after this one right here was born. And after using DaVinci at a fraction of the cost of Adobe's Premiere Pro to produce about 90 videos, I can't say that I'll ever turn back, especially with Adobe's pricing strategy where it constantly and consistently goes up. And another relevant story to the eroding economic moat of Adobe because of fierce competition. So when my first baby daughter was born, 3.5, I guess almost 4 months ago now, My wife was like, we have to pay for a photography session to capture this moment. She's only gonna be a week old once. Let's do it. My hesitation was that it cost $300 US for a 30-minute session to get 10 photographs of our choosing in a digital format. And I was like, $300? But, my wife just gave birth after carrying her for 9 months. I wasn't gonna sit there and argue, okay? So we show up to the location, and after 30 minutes passes, we weren't able to get the exact shot that we wanted with her. So we rolled on over 1 extra minute, and when it said 31 minutes, the photographer was like, hey, I'm gonna have to charge another $300, but this opens the door for minutes 31 to 60. And I remember at the time, I put my foot down, I was like, no, we're not gonna do it. We're just gonna call it a day with what we've got. The prior 30 minutes, even though she was kicking, screaming, pooping, and vomiting, and low-key after that event, I went home and I started reflecting on myself. If a photographer can charge freaking $300 for a 30-minute photography session, why the heck am I charging $9 for a stock analysis, right? And so that's why I decided to increase my prices as well, because I was legitimately charging starvation artist wages. So funny story, when my daughter turned 1 month old, my wife insisted that we do another photo shoot, and I was like, no. Please trust me. I've got an iPhone. I don't know where it is. I lose my phone like 20 times a day. I told her I can do the photo shoot if we go to a really pretty place with trees everywhere here in Japan, and I will edit it and I will get it done. And the cost is free, right? Because I already have the phone. And lo and behold, my photo shoot with my iPhone that I edited using Apple's integrated technology and AI features, it looked just as good as the professional photographer. And when I wanted a specific look that I couldn't modify myself, I would just feed it to ChatGPT or Gemini to get the exact effects that I wanted. If I wanted to remove a shadow, if I wanted to make her smile a little brighter. And that experience taught me, in the future, I'm going to hesitate more and more when it comes to paying $300 freaking dollars for a photographer. Now, obviously, if you make your living as a photographer, I'm so sorry. But between you and me, this household right now, we're really tight on our budget, and to fork over $300 and then to say, hey, we're gonna charge you $600 to roll into the 31st minute, dude, it drove me up a wall. I'm so sorry. Now, obviously, at the time, I doubted myself as well. I was like, well, maybe the photographer can produce something that's gonna be so good that I cannot replicate. Sure enough, the iPhone, just as good, if not better, because we weren't in a time constraint of 30 minutes. That stress, that pressure. Instead, I think we spent like an hour and a half that day getting every look and shot that we wanted without feeling like we're being milked. Now, of course, me alone jumping ship from using Adobe's ecosystem, it's not enough to move the needle, okay? But imagine when hundreds, if not thousands of people start realizing what I just realized, that they don't need Adobe as much as well. Hopefully you're starting to get the logic, the hamster that's spinning in this brain right here. And then also, talking about competition, right? Here's a really important one. You have Figma. Do you remember a few years ago, Adobe tried to buy them out for $20 billion to stop the threat because they realized the web-based collaborative design methodology is the way of the future? They wanted them. But because of antitrust, monopolistic, regulatory hurdles, that deal fell through. Adobe had to pay Figma $1 billion for their troubles. And now Figma, they're their own publicly traded company that's eating Adobe's lunch in the UI and UX space for designers. So what I'm trying to say is instead of absorbing that threat, Adobe now has to compete with him. And changing gears a bit, if you're a margins and numbers and data kind of guy, Adobe's running into a margin issue as of right now. I mean, we just took a look at their numbers and it looks really good, right? But in the next like 2 to 3 quarters, it's gonna start to look rough because every single time that someone uses Firefly, which is Adobe's generative AI, it costs them money to generate whatever it is. And what I mean by that is they're spending billions of dollars on GPUs and a cloud infrastructure in order to support that generative AI. And so if they raise their prices to cover the AI costs, think about it right now. more and more customers are going to jump ship to the cheaper options that can do exactly the same thing that Adobe can do. If they do not increase the prices to use Firefly, they're going to keep losing their juicy margins and their profitability, and their books are going to start to look rough in the next 3 to 5 years. So do you see that dilemma? So where does that leave us? Let's talk about Adobe's economic moat as of right now. So even though right now Adobe is industry standard and across most S&P 500 companies, they utilize it, it's still not a legal requirement like the credit or bond ratings that are given by S&P Global or Moody's. Their seal of approval, that regulatory moat, absolutely powerful. It's a toll booth business model. On the other hand, with Adobe, I just feel like most people or enterprises and organizations, they just stay with Adobe out of habit. If it's not broken, why fix it? And of course, with preference. So if I were to refer to my economic moat cheat sheet, I think that would sum it up as switching costs. If you think about it from the lens of a CFO who wants to save the company money, increase their margins, the profitability and all that jazz, I think if the value proposition of jumping ship to one of their competitors is able to save their company that much more money by not using Adobe anymore, I think that's an executive decision and an option that's going to be selected time and time again going forward. As of right now, might not be the case, but 3 to 5 years, possibilities. And then I also wanted to address Adobe and the proprietary data argument, and that's why they're tier 2. I disagree. At the end of the day, Adobe's a data custodian, right? They'll keep your information secure, but it's still your information. Meaning if you leave Adobe, you can take that data with you to another platform and another software. Because when you think about tier 2 proprietary data companies like S&P Global and Moody's, you can't jump ship with that data. They're the ones that are authorizing and giving that data a sense of meaning. They don't just hold the data, they give you that stamp of approval that the entire global financial markets operate on. They're legally required to use their stamps of approvals. With Adobe's, not so much. Now think about it. You can use any software to calculate your own taxes or to create a PDF, but you cannot use any software to give a bond credit rating. You might be able to do the math and the calculations and say, this is what I have, but the financial markets aren't going to respect that. It has to come from FICO, S&P Global, Moody's. And let me just stop myself. Listen, I'm not trying to be the villain. I'm not trying to be the bad guy. Do you really think I enjoy getting hurtful comments? This video right here, it's not going to make people happy, jolly, and saying, thank you. It's going to be quite the opposite. I'm making this video because if at least one person reconsiders making a bad investment decision, then I think it's worth it. And it's not financial advice. This is just for entertainment purposes, but I see way too much bandwagon and groupthink when it comes to Adobe. Everyone thinks it's a good deal, but when you pop open the hood and you look at the engine, the transmission, and everything else, it's like, I don't know, guys, this looks like trouble. It really looks like the same playbook as PayPal. The numbers, financials, and everything else looks good, but the future trajectory looks hairy. So in short, if you did not want to watch the entire video and you only want the bottom line up front, the cliff notes, the big question when it comes to Adobe is, what's the growth catalyst? What's going to happen in order to stop their stock price from free falling? What's their future looking like? When it comes to their growth and new customers, I'm telling you right now, that's where I feel bearish. I think the competition is gaining ground, trust, and offers better pricing. Whereas with Adobe, they're just price gouging at this point. So maybe not right now, but in the next like 5 to 10 years, that means their revenue per customer is going to be flat, or worst case scenario, it's going to decline. If, when you think about their customers, if they don't need as many professionals in their organization using Adobe, why would they continue to pay for as many seats, right? it's going to be reduced over time. So like say Adobe is making $50,000 from one enterprise organization, but if they're learning, we don't need as many video editors, social media interns, or photographers on the team, and they reduce the number of seats, they might only pay Adobe $10,000. So that revenue is going to drastically decrease. The customer landscape, it reminds me of SiriusXM, right? With Adobe, I think their playbook right now, it's holding on to their existing customer base. Likewise, with SiriusXM, that's exactly what they're doing. They're trying to hold on to their existing customers, like the truck drivers or the people that are like 65 or 75 years old. But quarter after quarter, I've been tuning into their earnings. They're losing subscribers every 3 months or every 90 days. And they're leaving for SiriusXM's competition, Spotify, YouTube Music, Apple Music, and other music streaming platforms. That's exactly what I see happening with Adobe, right? It's not going to happen overnight, but it's like a slow death by 1,000 tiny little paper cuts. And I'm going to be quite frank with you. When I think about SiriusXM's business strategy, holding on to the existing customer base instead of trying to strategically acquire new regions of opening up Pandora and everything else, I'm not a fan of it. Because when it comes to a dividend compounder with cheese, I want to see acquisitions of more customers because you have a wide economic moat and a competitive advantage that makes the rivals pale in comparison. That's just not the case with SiriusXM. They only operate in North America, which boggles my mind. If they were to open up the doors to try to fight for market share in Europe or Asia, dude, that company wouldn't be declining as hard as it is right now. Me personally, I grew up listening to Pandora 2008, 2009, and all throughout college. I like Pandora. I live in Japan. I cannot access or use Pandora. Even with VPN, they shut it down. But circling back to Adobe, don't get me wrong. I truly believe that Adobe's a great company. I think it's good. I like their products. I just don't like their future path. And AI is going to be slowly compressing the number of seats, the pricing power, and the growth multiple that justified Adobe's historical valuation. Because if I pull open their trading multiple historically, and we jump on over to the ratios tab, and we take a look at their forward trading multiple, like in 2017 was a 35. In 2020 was a 44. In, I don't know, fiscal year 2023, it was a 35, right? Now, the forward trading multiple is 11. And I think what's happening right now, the markets are not just willy-nilly selling out of Adobe to punish them. They're pricing in their future of what's going to happen, the narrative, right? Because if their growth is going from 25% year over year or 23% year over year down to like 8%, or I guess in this case, 10% for the past 3 years, between you and me, I think that warrants a much lower trading multiple. I don't think they should be trading for a forward trading multiple of a 35, right? If the top line keeps shrinking, there needs to be an adjustment in their valuation. And circling back to the beginning of the video, that's why I'm comparing Adobe to PayPal. The growth expectations are being reset, and that means a lower price for both PayPal and Adobe. One thing that I really like about Adobe's leadership team and how they utilize their capital is they buy back the shares. As you can see, in 2016, 504 million shares outstanding. And over the grand scheme of things, they are buying back the shares. Even during the pandemic, they bought back the shares. And now in 2025, there's 427 million shares. This is really good. Because when it comes to their earnings per share, otherwise known as the profits per share, if there's less shares outstanding, that's going to financially engineer it to be a bigger number. In almost every case, except for like Amazon, Nvidia, and Palantir, diluting the shareholders is a really bad thing. Nonetheless, the reason why I say Adobe's like PayPal is they're doing the exact same playbook. They're also buying back the shares aggressively, as you can see, right? But they're also a sinking ship. I can already predict and forecast the amount of hateful, mean comments that I'm about to get because of this video, and I get it. If you're invested into Adobe, you're probably upset. And between you and me, I hope you're right. I hope that Adobe bounces back and they have a rebound and they can hit $500 or even $800 a share. I genuinely hope that I'm wrong, that this bear thesis is complete nonsense. Even though Adobe's in the horizontal tier 4 category, according to my own subjective standards of the software and tech stocks, I think Adobe's undervalued. I think what's happening to them right now is a little too harsh. I could see them falling to like 300, maybe like 325 and having a forward trading multiple of like a 15. But to see them be at 250, flirting with almost 225, yeah, I feel like that's a little too harsh. Because it's not all sweat and farts when it comes to Adobe, right? They're integrating AI into all of their tools and features. They're not just sitting idly and saying, we're not going to play with AI. No, Adobe's making the pivot into becoming an AI company, but the margin issue is just, how are they going to address that? And I hate the fact that their economic moat just boils down to switching costs at this point. And it's truly sad to see what's happening with Adobe as an organization, but also with their stock price. However, having said that, that's kind of where my regards for the company kind of over, because I don't think it's one of the better deals out there, like the tier 1 or tier 2 tech stocks that are also selling off alongside with Adobe. I like Adobe, just not enough to invest in it. If you're invested into them, I'm genuinely rooting for you guys. But from the sidelines, I'm not going to buy any shares of Adobe. I don't care if they become 150 a share, 125, I'm not going to jump in. Let me know what you think of Adobe. I'm going to put this baby girl down for her next nap. And I know this was a long one, but I love you guys. Thanks for taking the time to hang out with me. Stay safe and good luck in the stock market.